Boom! What's going on, everybody? 360 Digital Closing Bell Daily Energy Market Summary. We're live on YouTube from an undisclosed location here in Denver, Colorado on this gorgeous Thursday, October 1st, 2020. First day of the final quarters through quarter four has finally arrived. As always, I'm joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, oilandgas360.com, an international man of mystery, Stuart Turley. How you doing?
I'm doing great. My passport is all ready to go, and it's a beautiful day in the neighborhood.
We have a wildly busy show today, and we have some really exciting news that we'll probably announce throughout the show. But we have a big show lined for you. When we talk about indices, we're fairly flat. Oil markets tank off. OPEC production just going crazy. We'll cover everything that happened. Natural gas, we see a 76 billion cubic feet increase, drives price down a little bit. We got a couple funerals to hold for Lone Star. Oxy does some really interesting things. Stu, as always, has some things on the international news desk. But first, guys, just subscribe. 360 Digital Closing Bell, iTunes, Spotify, YouTube. The best way to stay up to date on all of your energy market news. Mixed bag in terms of the overall markets today. Major indices kind of give a different real view of what the market thinks. SPY finished about a half a percentage point up. Dow Jones was pretty flat at about a tenth of a percentage point. Tech stocks were up about 1.2 percentage points, really off the back of mixed signals coming off renewed stimulus talk. So it looks like there's going to be stimulus number 2.0. Looks like there's going to be direct payments, which, if you remember, was a boon for tech stocks. Places like Amazon, Microsoft, Apple saw huge gains. Netflix, one, because everyone was Netflixing, and two, when you got to buy stuff online. So this stimulus is seen as a big boon for tech stocks. So that's why, as these talks continue to roll out, watch those indices to sort of begin to diverge. Remember, they were diverged for a while. They've come back now recently. Look for them to probably pull away from each other in the wake of these stimulus talks. Crude oil had a terrible day, down 3.5, really three and three quarters percentage points, 38.71 off none other than, guess what? OPEC cheating. Iraq comes out today and says they have really increased the amount of oil production that they're coming to. We'll cover that here. 12-month strip didn't do much better, though, and that's really why we're looking at those demand numbers on that side, because that's really 2.5 percentage points. We're down to 41.56 on that 12-month curve. Goldman Sachs still thinks $65 strip next year. That'll be interesting to see. Natural gas down 1.5 percentage points, $2.49 as inventories continue to rise. We saw a 76 billion cubic rise in overall inventories today. I encourage you to check all of that stock stuff out on the Oil and Gas 360 crude oil and natural gas inventory dashboards. You can look at where all of where the different paths sort of increased, but really overall we saw about a 76 billion increase, and that's what we saw drew that price of the front month curve down. Back into the curve, though, off the back of some really bad weather numbers that came out for 2021. $2 or 2.5 percentage points on the downside, 3.02 percentage points. The National Service of Geographic Administration, I know it's on the news desk, you can check it out, ran a really an updated weather report for end of 2021. Doesn't look good, so that's going to impact that back end of the curve. XOP, which are E&P securities contract, as always with the price of oil gets hammered, so does it, down 3.3 percentage points, 40.67. Woohoo! $40 for that XOP contract, not good. OIH, which is Oilfield Services, was down to 94.21. That's 3.5 percentage points on the downside. So not good for our energy indices right there. When we look at the downside for our energy equities, Gulfport Energy, 46 cents, that's a 12.5% drop. Houston America Energy Corporation, Texas, loses again, 16% on the downside, $1.62. And finally, Oasis Petroleum, off the back of Chapter 11 bankruptcy, down 24 percentage points, 21 cents. I think a lot of people might be asking, Michael, I heard Lone Star filed bankruptcy. Why weren't they up there? Well, guess what? When your company's in that rough of shape and you declare bankruptcy and your stock increases 6% to 24 cents, that means that this was long overdue. And we were talking about mostly dead. They're officially dead, but you actually come in 6 percentage points up. The fifth biggest mover on the day, so if you're wondering where they fell in on the day, Tricor Resources finishes third, 7.5 percentage points. That's $6.62. Valco Energy, $1.12, up 12 percentage points. And Sanchez Midstream Partners, great website, 32 cents, about 13.9 percentage points on the upside. Stu, what's on the international news desk today?
Hey, Michael, we got a bunch of stuff. And first one, Noble Energy shareholders likely to approve the $4.2 billion Chevron deal. That is fabulous. I think they got a steal on it, and I'll tell you why. The purchase would boost the Chevron's holdings and nearly add 1 billion cubic feet of natural gas out of the Leviathan field. That's stinking huge. Good for them. At 4.2 billion, I think it's a stock trade, and it's about $8.58 a share.
Well, I mean,
Good for them, man.
It's assuming if you think oil prices, if you are in the Goldman Sachs mindset where you think oil prices are going to rebound to the $60 level, then this is a buy low acquisition for a company like Chevron who can afford to take the capital out right now. So it'll be very interesting to see this deal. I think will much like the Anadarko Oxy deal was off oil, tanked because of oil prices. Now it's tanked because of a lot of stuff, but oil prices didn't help. I think you're going to see this deal is going to go with whatever oil prices go.
Well, I would agree and disagree. This is part of the Mediterranean Club issue. And so it is right in the middle of
I know you're bullish on this area. If you've been listening to if you guys listen to our long form podcast Monday, Friday, Stu is a fan of the Mediterranean.
Oh, I want to be part of Club Med. Anyway, Libya is back at it, and this is why I don't think that your boys over there can properly give us a prediction of $65. I got this little country out here called Libya. They're putting out again another 300,000 barrels, another 600 barrel shipment tomorrow, and another there are 3 more 600,000 barrel cargoes coming out. And OPEC cannot keep these guys under control. How do you keep pricing at $65 a barrel when you got these guys running them up?
No, when you have on top of that, I saw that 240,000 barrel cheat. Iraq came in today and just had absolutely terrible cheating. I think it was, let's give you an idea, it was 380,000 barrels for Iraq that came on between May and July, which was that's a 400,000 barrel gap more than what they said they would cut. So everybody's cheating. And I think what's really cool is available now on oilandgas360.com for subscribers only are international production dashboards that go back on a month-to-month basis. If you're subscribed, I highly recommend going on our website right now. Stu's going to run it on the closing bell email if that's where you hear this. If you're listening to this just on YouTube, I go to Oil and Gas 360. Go check out our crude oil dashboards. There's going to be links to all of this. But for subscribers only, you're going to be able to see month-to-month regional and country OPEC, non-OPEC production. It's wildly cool to go through, and you can see this. You can see you can go back and overlay, and you can build these charts. Overlay what they said they were going to do, and then overlay what the reported productions. And Stu, it's brutal. So it's going to be really cool. We're now going to be able to see this stuff in real time.
Oh, absolutely. And I'm so thrilled. We got also announcements for ESG on Monday. We've got a few others. We are Dashboard City. Behind the paywall, we got a few up front just as tools, but we are Dashboard Cities.
All right, it's been doing really good. Anything else on the news desk today?
One last one here real quickly. Occidental, you're already talking about a lot of that. This one is the onshore assets in Colombia. We love our South American brethren down there and everything else. Occidental has been operating over there for over 40 years. So that is a $2 billion. It's only part of the $2 billion divestitures that are going on right now. This particular one is $825 million with $700 million up front.
Yeah. So we went. If you go on Oil and Gas 360, we ran the correct title, which was Oxy sells Colombian onshore assets for $700 million. You go to anywhere else, the headline's going to read $825 million. But no, it was $700 million upfront and $125 million in what are called oil price incentive-based payments. They ain't never going to see that. So that's why you come to Oil and Gas 360, because we give you true headlines.
And facts on crayons. I was looking at the data. Okay, look, I'm sitting here looking at the data and pulling the charts on the history on this, and I think it's a good buy for 700. So, anyway,
I mean, if it's onshore Colombian. So there you go. It's not that there's offshore Colombian per se, but I I honestly was very unfamiliar with the South American oil markets until the oil and gas conference came around, and I was able to hear from a lot of different companies, specifically Geopark. I was wondering, were they bidding on these assets behind the scenes? We'll never know. But
Yep.
there's some good stuff out there. And if you know how to operate in that area, there's money to be made, because I like the way some of these South American companies specifically have themselves, their niches down there. So it'll be an interesting deal. Like I said, they are looking to reduce that $2 billion in divestitures. But just give you an idea, Stu, they've got $300 million that's callable August 31st, 2021, and that interest on that's about $79 million. So they've raised a little bit of capital here.
That's a little more than my Visa.
It's a little more than that Visa bill. Their callables $300 million. It's not quite a black card, but and so that's another thing you're able to see if you're an Oil and Gas 360 subscriber, is kind of the debt layout. And I'm looking at it right now, and yeah, I mean that callables August 31st, 2021. It's about 337 million. Which will be interesting. They also have a 1.1 billion in 2020. It gets bad in 2024, 2026. So it'll be interesting to see what they do out there. But at least they can cover up, cash on hand. They had about a billion cash on hand. So I mean, they've got enough. But I mean, they take a lot to operate every month. They much like our friends over at Chesapeake, who we found out spent $200 million a month on royalty fees. Woo-hoo-hoo-hoo! No wonder they're bankrupt,
Wow.
Stu. Producing natural gas when it wasn't worth anything, and paying royalty fees. Ooh, it's been fun to see some of the fallout. Along the bankruptcy note, we unfortunately have to hold another moment of silence for our friends over at Lone Star. All right, that was enough. A week ago we mentioned they were only mostly dead. Our favorite Princess Bride reference, but they've officially gone into it. They now have declared Chapter 11 bankruptcy. One of my favorite Twitter follows, War572, had a great overview of some of the details. I'll read it. RBL lenders are getting 90% of their claims, which is about 150 million outstanding of the new RBL. 20% or about 30 million in new money that's coming into them. And there's about 10% of new equity that's going to be available. Note holders are getting 96% of the new tradable equity subject to an MIP trade. Preferred note holders are getting 3% of the new equity subject to the same things. Common shareholders are getting 1% of the new equity. So, hey, at least you're getting a percent in this point. We've seen worse. RBL, their new RBL redetermination is still 100%. So someone is still bullish on these assets. Here to give you an overview, company owns 52,000 net acres, operates 256 wells, production's about 13,000 barrels a day, 77% oil, 15% natural gas, 8% natural gas by reserves. Current, Bloomberg book value is about 225 million. They have about a 60 million deficiency. 250 million outstanding unsecured, 2.2 million they took in CARES Act. Their hedges were also liquidated in order to repay some of their debt, which is about 30 million from that. So, I mean, it'd be interesting to see what happens. Do I think they're an acquisition target? Maybe. I think some, specifically because of where their acreage is, I think they're a target to get acquired. My guess is I think they're just going to roll this out as a new company. We'll be following this as we move forward. As we've been talking about all of these redeterminations coming in, our friends over at Earthstone, we love them. New redetermination today, drop of 13% in their ceiling, but Stu, they also dropped their outstanding debt 23% from 168 million to 130 million. So they saw that redetermination from 275 in their borrowing base to 240, but they were able to drop even more in debt. So good little ratio right there. I wonder, that's a, and they actually saw, shares were up a little bit today. About looks like, I don't know. I don't want to speak too soon, but it looked like shares were up of Earthstone. So, market did like that per se, singing that down. So some of these redeterminations coming in, honestly, they're a little lighter than I think. And I think that's because people are pricing in just $40. And I think at $40, there's enough money to go around where people can kind of just stay afloat. If you're, if you're looking for a job or if you're looking to expand, I don't think that's going to happen. But I think at $40, I think people can stay afloat. I remember I was on not a conference call, but I was watching a conference call, and one of the panelists was Scott Sheffield, who was talking about $40 is that sweet spot. And I say that sarcastically of, You can stay alive at $40 as an oil operator. Can you really grow? Can you invest? Can you continue to do something? Not really. So that's why you see some of these larger players taking advantage, and that's why M&A season might be coming up a little bit. But, I think that's why redeterminations haven't been horrible up to this point. But I don't know the long-term growth, and I think you're seeing that getting priced into anything. I'd be remiss if I mentioned Callon Petroleum. Also, I did what we called an oil overriding royalty interest transaction, what we call an OORI, which is basically you sell minerals or sell future production for upfront costs. So to give you an idea, the royalty transaction generated $140 million in cash on front. They also were issued a $300 million principal valued second lien loan notes secured by Kimridge Energy. So to give you an idea, that's $140 million cash on hand for some minerals that they've sold. So now they're not selling them to private owners; they've sold them to one company, but now they have a $300 million second lien borrowing base on top of some other things they've got. So raising some new cash. This isn't callable until they don't have the callable date on it yet. I'll have to look it up specifically. Shares were up about 18 percentage points this morning on pre-market trading. So the market did like that news. As you're seeing, just interesting ways to raise capital. You would, overriding royalty transactions are they've been a thing, I guess, but you haven't seen major companies do them. They were things that, what our friends over at Nova Royalties do with smaller operators all the time. That was this was something that was done by smaller operators to just get upfront cash and really what they would call exit some of the financial risk of their operations. Bigger, you're starting to see Callon Petroleum do this. We saw, I'm forgetting the company who did it a couple months ago. I should know that, but we ran a story a couple months. This has been leaking out. Officially seeing a company this big do it. I think it's a sign of the times to come. Man, Stu, it was a really busy day. We miss anything today on the show?
I don't know. I'm kind of exhausted.
Yeah,
we have some fantastic things coming up for our subscribers.
Yes, I highly recommend go to oilandgas360.com. It's going to be plainly obvious where you can subscribe to all of these dashboards. Go there, subscribe. I will make a promise with you. If you subscribe and email me, I'll pay for your first month. The first 2 people that do that. You got to email me, mtanner@entercoming.com. I'll pay for your first month. We'll take it out of my paycheck. We'll make that deal right there. You email mtanner@entercominc.com. You sign up. First month, we'll take it out of my paycheck.
Done.
Let's do it. Sign up, people. And with that, we're going to go and let you get out of here, get back to work. Thank you for checking us out on the 360 Digital Closing World Daily Energy Market Summit here on this gorgeous October 1st, 2020. As we mentioned, start of quarter 4. Really interesting to see how quarter 3 plays out. For Stuart Turley, I'm Michael Tanner. We will see you guys tomorrow afternoon to hand out a hall pass. And we'll see you in the morning for a long-form podcast available on all your plays. We'll see you tomorrow.